take a look at this. This is what a $200 trading day looks like. And if you do that consistently, you're looking at $4,000 a month, which is way more than a lot of 9-to-5s pay. But here's the thing, most traders never even get close because they're jumping into random trades, keep switching their strategies, and never stick to one trading plan long enough to see the results. So in this video, I'm pulling up my charts and walking you through the exact setup I use, how I manage my risk, and the exact steps I would follow if I was starting completely from scratch. There are two types of traders that I see all the time. The one that is trying to flip $50 into $5,000 by the end of the week, and there's another one where they just load up a $5,000 trading account, they never test the strategy on a demo, and they blow up the whole thing within 3 trades flat. I've been both. I have revenge traded, skipped stop losses, kept adding to losing positions just because, well, this trade feels different this time, right? And yeah, I have had those trades where they felt like a pure luck, followed by the losses that made me want to quit altogether. But let me be real that none of that ever got me to making $200 a day trading Forex. If anything, it's just kept me stuck in the cycle of overtrading, overthinking, and starting over every other week. So if you're sitting there thinking, why can I just be consistent in trading? You are not alone. But that question is exactly what held me back for quite a while. It's not about being smarter or trying every single indicator in a market. It's all about building consistency around one trading strategy that actually works. So all you need is one solid trading plan that you can trust, something that you can follow trade after trade without overthinking or second guessing. And that's what's changed everything for me, because when I finally stopped trying to predict every single market move and start focusing on one clean and repeatable trading setup, that's when I started seeing those $200 trading days stack up. And that's exactly what I'm about to show you next, the trading strategy that helped me to pass my pro firm challenge and start trading with the confidence. Alright, so here's exactly how I would approach this if I want to aim for those $200 trading days, and I want you to follow me here along because this is where it gets very, very exciting. And don't you dare to tell me that making money is not exciting. Okay, so the first thing you want to do is to find a Forex pair or an asset that is actually trending, not some random sideways mess. I am talking about clear market structure on both the daily and the 4-hour time frames, because that's the core foundation of this trading strategy. So for example, over here, this is AUD/USD on a daily time frame, and we can clearly see that the market is bearish. So what you want to do next is to jump into the 4-hour time frame and confirm if you see the same direction and there. And again, on the 4-hour time frame, we can confirm the same bearish bias because every single time the price pushes lower, it keeps closing into new lows every single time. And if that trend also lines up with the weekly or even the monthly time frame, that is even better. So that is your structure, and trust me, once all time frames are pointing the same way, you are already stacking up the odds in your favor. And it's one of the best things you can do when building a high probability Forex trading setup to achieve those $200 a day. So once you have got a clean trending pair, the next thing I do is check how far the market usually moves, and for that I use the ATR indicator on the daily time frame. So this basically tells you the average number of pips that the pair moves per day, and that's your volatility range, which is super important for your trading setups and the overall risk management. So if we circle back to AUD/USD on a daily time frame, the ATR indicator is here at the bottom, and it's currently telling me that AUD/USD moves around 62 pips per day. So then what I do is I basically take that ATR value and drop to the 4-hour time frame, and this is where I actually look for my trade setups and time my entries. So what you want to do here is to see if the market has already moved what the ATR told you, or there is still some room for the price to move during your trading session. And you're probably wondering why, because well, ideally you want to enter once the price is exhausted, not when it's in a mid-run, right? So think of it like this. The Forex market pushes, then it breathes, it takes a stop. So we want to trade that next push after the exhaustion. So that's the kind of trading setup that gives you the edge. So let's say the trend is bearish, as we saw on the daily and the 4-hour time frame. So what I will do, I will just go ahead and I will measure the ATR from the swing low up right just like that until we see that 62 pips value from the daily ATR. So once I've got that, I will start building the rest of the trading idea, and what I will do, I will add the monthly pivot point, which just basically gives me a key structural level to work with. So in this case, a monthly pivot point for AUD/USD was around this level. So what this basically means is that if you see the price crossing below the monthly central pivot point, you will be looking for selling opportunities only. And the next thing what I will do is I will draw a Fibonacci retracement from the most recent swing points. So in this case, it would simply look like so. So when I get that kind of confluence, you know, the pivot point, the Fibonacci, previous structure, that is my trading zone. So this is where I wait for the price to come back into. And I don't click just sell yet. I also wait for a candlestick closure below this confluence area. So now that I know that the overall market direction is bearish, the daily volatility has been reached, and the price is also rejecting from the 618 Fibonacci level, and is also trending below the monthly pivot point, I am ready to enter my trade. Now for my stop loss, what I do is I use the same ATR indicator but on the 4-hour time frame. So in this case, the ATR value is 269, which is roughly around 27 pips. But what I will do is I will add a little buffer on top, so maybe like 5 pips or 3 pips, just to give the trade some breathing room. So guys, please promise me that you will not strangle your trading setup with a very tight stop loss. Just use the ATR indicator on the 4-hour time frame. Don't make the same mistake that I used to make in my trading journey early on. And for the take profit, I'm always aiming for at least 1 to 2 risk to a ratio. So if I'm risking 1%, I want to make 2%. And that's how I grow my Forex trading account and making those $200 a day, not by only winning every single trading setup, but also by sticking to a risk to reward plan that stacks the odds over the time. Now here's the question everyone asks: what lot size should I use for this specific trade? And honestly, do not overthink it and use the baby pips lot size calculator. So all you have to do is to type in your account balance, your risk percentage. Let's say from 0.5 to 1% is fine if you are just starting, and then you have to type in your stop loss in pips, and it tells you exactly what lot size to use. So that's done. That is responsible risk management, and it's key to this entire Forex trading strategy. And what I love about this whole trading approach to make those $200 a day is that this is not based on, hope or, some random indicators. You have got confluence, you have market structure, you have volatility, and you have a clear trade entry trigger. And that's how I trade right now. And honestly, it's what I wish I stuck to when I first started learning how to trade Forex. And if you can follow this trading approach that I just showed you, you can easily make those $200 a day just like that. So you're looking at these trading results and you're probably also thinking, okay, this sounds amazing, but how do I actually do this if I don't have thousands to trade with? Because let's be honest and realistic, if you are starting with a $500 trading account and risking 1% per trade, that's $5 per trade. You're not hitting $200 trading days like that. It's just not realistic, and that's where the most beginner traders, they either over leverage trying to force the results, or they just give up too soon thinking that the strategy doesn't work. That's why prop firm trading is a game changer if you know how to trade with discipline. So platforms like FTMO or any other reputable prop firms can give you access to $10,000, $20,000, or even $100,000 trading accounts, and the best part is that you keep the large portion of the profits. So instead of trying to flip a small trading account and stressing over every single pip, you are using someone else's money with proper risk management rules to make $200 a day trading Forex. But here's the thing, before you even consider applying for any challenge, you have and you must prove yourself that you can stick to a trading strategy and a trading plan for at least 30 to 60 days. So what I would highly suggest you to do is to open a demo trading account, set it to 10K, 20K, or whatever size you would eventually want to get funded with, and then treat it like your own money. And you can actually use the exact Forex strategy I just showed you. Stick to 1% risk, only take clean and high probability trading setups with full confirmation. So if you are serious about making $200 a day trading Forex consistently, everything starts right now, right here, because all you need is a structure, trading strategy, discipline, and a plan. And if you found this video helpful, let me know in the comment section down below. Make sure to like this video and subscribe for more. Thank you for watching, and I will see you next time. Bye!